All right. Good morning, guys. So today we're going to be talking about, in short, I'm not going to be doing too much. I'm not going to be making too much noise, right? We're going to be short and precise. So we're going to be talking about KLR, and everybody knows how you can build your bias from KLR down to entry, which is very, very simple. But I would like to drop a very, 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 very important information about KLR. You need to master structure very, very well, right? You need to master structure very, very well, ranging from the structure type 1, type 2, and what type 3. There was a day I sat down and I explained structure type 3 in detail. Like it is very simple, but that's how it happens. It's a key level that got disrespected. Like, normally we want to use an engulfing buy or an other block, anything people want to call it, an engulfing buy for a buy or an engulfing sell for a sell. The market decided to disrespect this engulfing buy that it was supposed to be used for a buy. Then markets disrespect it with like aggressive disrespect. That was the origin of the structure. Aggressively, I've said it 3 times. And the market will create inducements for that particular zone. And the market will use the engulfing buy that was supposed to be used for a buy. Market will now use it for what? For a sell. Now, this structure type 3, I think I've explained this thing. So, structure type 1, type 2, and type 3, all of them work perfectly. So, for you to be able to trade KLR perfectly, you need to understand structure very, very well. Right? All right, now, how do you trade this particular concept I call KLR? It's very simple. People can call it a lot of different names. I don't know. But from how I've been trading it and how I've been seeing it, I call it KLR. So I'm going to be strictly talking about the type 1 because the type 2 KLR is somehow confusing. You get it's confusing and has so many ups and downs. So I hardly even talk about it because sometimes it takes people make it's better you miss an entry than take an unnecessary loss. So usually you can take unnecessary loss from that particular type 2, right? So I'll focus on the type 1. Now, a type 1 KLR is you coming into a tiny frame, you want to build your bias, and let's say you now have a V-shaped key level right here. So let's say this is a V-shaped key level, which is what? A resistance. So we expect that when market comes to this on the daily time frame, we're expecting the market to what? Reject. But market refused to do that rejection like this. Market refused to reject and market breaks. No, now, once the market break this key level, your next expectation is you have already built a bias. That's what I want you guys to know. You have already built a bias, meaning you are bullish. Why? Just because the market has disrespected that key level. Now, I want to add another thing inside your head. The thing I want to add inside your head is after the market disrespects this key level, you want to see the candle that disrespected to close bullish. This is an additional information. Now, once the market disrespects this is now where you want to do your KLR. The market has disrespect an A-shaped key level, which was supposed to be used for a sell. Market breaks above it on the daily, on the weekly, sometimes on the H4. Now, it is already telling you that you are bullish. Now, what do you do? KLR now comes to play. You are now going to be refining the key level on that same time frame that the market breaks. That's what brought about KLR. How do you do your refinement? You refine area in this life. Network is always going to disturb me. If I don't leave this area, there is always going to be a network issue. So what did I say last? Can you guys remind me what did I say last? What did you hear last? So we can continue. Tell me what you had last, guys. What did I say last? Hmm? All right then, good. Let me just go a little bit back, and then we continue. I know I've muted you guys, no problem. All right. So now, I would just start a little bit from the beginning, but I cannot keep explaining what I just said. Okay, now this is it. I said, now when you have an A-shaped key level like this, just like this A-shaped key level, right? Then the market was supposed to use it for a sell. Then the market disrespect it and use. Now, once the market disrespects it and give a break, you have a bias. You already have a bias that you are bullish. So now you need to be very good with structure type 1, type 2, type 3 for you to be able to take a trade off of this. But it is high probability and very simple. Very, very simple. Now, how? What do you do? Off of this daily time frame, you have this key level that got disrespected, which is going to be looking like what? An RBS, because it's a resistance that becomes support. So some people will be expecting the market to come and tap here and use this for a buy. I don't. Now, how do you enter the chart? This is where the name comes from, key level refinement. Which key level are you going to be refining into a structure? Now, you are going to be using only 3 key levels. 1, apex. Now, an apex can be a V-shaped or an A-shaped key level. So it can be a support or resistance. 2, an OCL. And then 3, a QM. QM is the word least probable, which I don't even use a lot, but it works. Least probable. So if you have the market disrespect this key level, then you're going to be paying attention to 2 key levels the most. Let's say you have apex, right? A QM right here. Okay. Let's say this is a QM, right? A QM. This is an apex, and you have an OCL. So this is not the basic doctor system. Now, if this OCL is closer to the market price than these two, you are using the OCL. You don't have business with those two. In short, QM is low probability when it comes to this. You are paying most attention to apex and OCLs. Once on that same time frame, the market breaks that key level. In short, listen to this. I used to say something. What did I used to say? I used to say that once the market breaks a key level and close above the key level based on KLR, you are looking forward to the key level formed by the 2 most recent candles closest to the recent market price. And that's the key level you want to take your entry from. You heard what I said, right? I'll say it again. You are looking for the key level closest to the 2 most recent, the 2 most recent candle that creates a key level closest to the most recent market price. Yes. So what do I mean? Now, if you have the market moving like this, now let's say the 2 most recent candle creates an apex, or the 2 most recent candle create an OCL. That's the highest probability key level that the market is likely going to use. Now, you now box out the key level, something I've been doing that you guys have seen, box out the key level, or if it is this one that is the closest, box it out. Now, inside this box is where you're going to be looking for either one of the following. It can be this, right? It can be this. Now, the box is going to be aligning with an area like this, right? Or it can also be this. The box is going to be aligning with the area like this. It can also be the structure type 3, which is very similar to this, which I don't even have to stress myself on, which is this too. The box is going to be aligning with the what? Area like this. Right? Now, this is what we call a KLR. If you understand this line representation, we're going to the daily time frame and you're going to understand it more. I'm going to delete this. Now, I don't know if you can find this GP225. I don't know how well GP225 works, but we're going to be looking out for 1 or 2 KLR that happen right here. All right, good. Okay. Let me try the weekly. Probably we can find one faster on the weekly time frame. Okay, very good. All right, now, okay, this actually, it's a form of KLR, but there was no break. But we can still use this for a proper explanation. But I would prefer the one that led to a break, then the market pull back to the area, and then we saw what we are looking for. But this one is not very suitable for that. But it's a KLR. We would need a better one. So I have to go back to the daily. Okay. All right. This one, oh, nice pullback. This one, yeah, nice, but not very nice. I don't think this one is very good. I can't find anything here. I've seen one, but it's not the one I want to talk about, right? Expect the market to go back to this market, did not come back. pull back to this market, did not come back, pull back to this market, came back up to this. So all these ones. So I'll prefer a better one. I think let's go back to our usual gold. All these ones work very well, but let's check GBP. Probably GBP is going to have a very good one. All right, good. So this is on the daily time frame on what? On GBP USD. So what do we have on the daily time frame? All right, I think we have one here. We have another one here. So, but then let's pay attention to what the market did right here. Now, if you pay attention to what the market did off of this area, what you're going to be looking at is the market came all the way up and break above this key level. So what you need to see is, let me cut. Now, what you need to see is the market breaks above this, right? Now, upon breaking up, in short, let me start from here. Let me start from this. Yesterday, I taught you guys something, right? I taught you guys something very interesting. And what did I say? Coming. I taught you guys something very interesting. And what was that? It's supposed to be something I should add to my concept, but I told you guys that, see, when you have a rejection and the market refused to close bearish, meaning if the market rejected from here, can you see that? Rejected from here and the market closed bullish. High probability, what you need to do is a KLR. So it's something I want to add to KLR, right? Market rejected from an area. If the market did not close bullish, it's just a pullback that, okay, the market's next key level is this. So this key level is now going to be your KLR area to pick a buy from. You have a rejection, yes, but this candle closed bullish. I've said this thing consistently. That's why I say most of the time, when someone is in my lifetime mentorship, they learn things first before any other person. They learn something when I start seeing that particular thing. Before I officially start, when I'm doing my 2027 mentorship, I'll now be like talking about it. By then, I would have been a master of it too, right? But you see that market rejected from here or closed bullish. Now, the closure of this candle bullish, it doesn't always mean there's a H4 breakout, they can be sell down. But if there is not, this candle closed bullish, then this area is going to be a KLR area for a buy. Now, this is where you guys want to now understand the area for that buy and why the buy and how the buy happened. Now, you can see the way the market came down, use that OCL and continue pushing up. Now, inside that OCL, that's where you're going to be looking for one of the structures I just talked about. Since it's a buy, it can come like this. Sorry, this is the daily, so it's not going to be nice, right? So let's go into like the lower time frame, and you see inside this area the structure we can find. So let's go into the H4 time frame. Now, on the H4 time frame, this is what we have. So let's look at the H1. Probably we can have a very nice structure. Probably. Okay, so we have a very nice structure, but at the end of the day, I know most of us, if not all of us, we are going to be missing entry. Why? Because this is where the market used, but us, we are going to be using this particular thing to look for a buy. Now, how do we buy off of the scalar zone? We're going to be buying from this QM. Why? Because this is where the structure is complete. What do we have? A sweep of liquidity right here. We have a breakout structure, and we have a structural liquidity, which is structure type 1. Right? So market just came back without tagging the entry and then continue. So this is what we call a KLR. But then if something like this happens, it doesn't mean you've missed the entry. It doesn't mean you've missed the entry. There are lots of ways that you'd have been a participant off of what? The continuation. Just like this key level here that got tested, overlapping inside this imbalance, with this low is now what? The liquidity, and then boom, the buy comes from here. So I think all of you understand all these things I'm already talking about, right? So, but once you see this is how a KLR works. So let's still go back into the daily time frame so we can give more explanation of how a KLR works. Now, if you pay attention to this again, right, the next candle closed here. Now, after this candle close above here, we'll be having 3 KLR zones. I'll delete all this. Our 3 KLR zones, once this candle closed like this, we have 3 KLR zones. What are our KLR zones? 1, QM. I'm not going to use this. 2, OCL. I'm going to be interested in this. I don't expect the market to come here. Why? Because I said the 2 most recent candles, which is this and this, that created a key level closest to the most recent market price. This market price at that time, and this is the key level. So expect the market to come here. Now, this is KLR type 1. Now, the KLR type 2 I'm talking about, I'll give you guys a little hint about it, is the high of this candle that is closest to the most recent price. We expect the market to come into the high. So from here down, we can look for a structure and we can buy from. So we don't expect always the market to come here. Type 2 says not the key level, but the high, right, of the closest candle. If it is for sell, it's going to be the low, which is something like this, right? So this one, the high. So I don't really teach it out because sometimes or most times market decides to disrespect it and come into the OCL. So, but this also is an area for refinement, meaning from here below, you can refine and look for a structure above. So something like this. So if you play one candle, let's play just one candle. You can see the next candle did not come into this. So all the market did was to drop into this. Now, since the next candle, the listening, came and still continue after breaking this high, created a new key level. Then inside this key level here, boom, this new OCL that's created and the market have this big extent of refinement, then your KLR is going to happen inside here. Any structure inside this big box is valid. But remember, I've taught you guys something about liquidity and what OCL. So this can be a point of heavy retracements, right? Market can retrace down before continuing to the upside, especially if you have a structure inside what this OCL, right? Obvious liquidity and a structure like this. But for now, we are talking about KLR. So let's pay attention to this particular thing. So we go into the lower time frame. So we're going to the lower time frame, right? On the lower time frame, we have this because our bias is clearly bullish. So we're going to the H4 time frame. Look at this area. Now, on the H4 time frame, what can you see? The QM fresh right there. Okay, public fresh QM here. Right, coming to the H1 time frame. Why are you looking for what? You're looking for a structure, a very valid structure. And this is it, a QM that got tested right here. And then the market engineered some sort of liquidity right here for you to now what? Take a buy. Then this is now a valid buy. But if you still someone that wants to keep going to the lower time frame, you might end up refining, and you end up looking for the best zone. Because right here now, after refining here, this is now what the best zone. Why? Because this is the area that is now protected. Remember, sweep of liquidity right here, breakup structure, and what an engineered liquidity. So if you properly follow the protocol of the entire course, you understand all those things, right? So this is now a protected load that happened inside that area, and then this is what is sponsoring that back for a KLR again. So if we still go back into the daily time frame again, we can still look for more. Now the market still continue going up, right? The market continue going up. So anytime the market disrespects a key level, see, you need to be both-sided. You need to look at buy scenario, sell scenario, overall market structure, and you still now pay attention to all things like that. So let's check Euro USD because that's the most common pair most of you trade. So it's going to be okay for us to check them. Let me delete this. All right, let me delete that. All right, you can see type 2 KLR here also, right? Which I don't often use. All right, but we can see a type 1 inside here. So let's try that type 1. I don't know why market, it came back to fail, sincerely, but let's talk about the type 1. So you need to be very careful when you're choosing it because this is what you can see. Like this is. Now, when the market dropped down, pay attention. Market rejected from this OCL, right? Okay. But then how did the candle close? It closed below this OCL. So market has disrespected a key level. Now, you are not paying attention to the market coming back to use this. You are paying attention to the market to come back to what you use. Either this OCL or what? This QL. These are the two areas because there is a QL, which is the least probable one I use. And then you refine this into a structure on the lower time frame. Probably you go to the H4. Let me delete this first. Right? You see the QM here. Market did not come back to that QM the next day. Okay. But after the next day too, what you can see is what you can see after the next day is market came rejected from here, dropped down, closed below key levels again. Then we are now looking for this one for another sell refinement. So this is very simple, and this is what you can do. This will present itself not all the time, but few of the times where you can take your entry, just refining from the higher time frame down to the lower time, right? So let me see this. We don't know how far this one held, but we'll look at it. Let's go into the 1 hour time frame straight so that we don't waste time. We will not waste time. All these areas have been used. Okay, we have it here. Okay, we have it here. This as our area of execution. Market started dropping, said break even, market take you out. Definitely. Market come back to use the original structure from here. This is very, very clear. Then we have liquidity right here. Then market use this and then to give us the original sell, which is structure type 3, right? This structure type 3. So let's look at it from the daily time frame. There was actually nothing there, just the refinement of what this QM. So refinement of this QM is what's going to make you enter here, not this one. You get this. Okay. So basically, KLR happened a lot. I don't think, when last did I say KLR? Let me check it at week 100, because this week I did not win any trade. I just ended up the week at a break even. So I just hit break even. I did not do anything. Right. But I want to talk about one thing. I want to talk about one thing, which is a model 5. If you see a model 5 on the daily, high probability is going to play out. Model 5 on the H4, high probability is going to play out. Like, what I mean by model 5, those people that have been with me or have watched my course, you basically understand that this is a model 5, something like this. Did you see that? So if you see closure right here immediately, right, not this type of break, this one market break below. Now, this one RBS break immediately reclaimed. This is a model 5. So if you pay attention to a lot of it, not this one, there's a candle between. This bearish candle should be next, not this, right? I'll find another one, something like this, but you can see the way this one failed, right? Okay, something like this. It usually holds sincerely, but I'm not trading those type of things still, but something like this, it's actually hold a lot, right? So this is like a model 5 that is happening on the very high time frame, on a very, very high time frame, right? So that's a KLR. So let's look forward to German 42 so we can see more of it. So on German 40, I think, do we have any? No, not recently. There's no one recently. It's because of the recent price action, but you guys would have seen a lot. You guys would have seen a lot. Okay, this one is the only KLR that happened here. So let's cut. Okay, this one here. Now, if you guys pay attention to this price action as always, the first thing you want to see is the market key break of a key level. Once the market break above this key level, you are paying attention to QM, closest, and then this one. You are not thinking that the market is going to come here the next day. Remember the next day. Remember the next day. That's what we're talking about. Once it is not the next day, you are not interested. Once a new storyline starts, you are not interested because the market is hardly going to come. What I mean by a new storyline is the market can drop here the next day and give us a 4-hour breakout. You see, this place is now implicated. Market is not going to come to that area. Do you understand what I'm saying? So now, but look, after the break, you expect here and here. The next day, market did not come to that area. So after the next day, what do you do? Quickly, you change your anticipation. Why? Because a new storyline must have started. We must have a rejection from like maybe another area. You can see that a rejection here, and then market created another one, OCL. So where do we have? We have the OCL here closest to where the market price is, and we have what was particular imbalance. So what do? We go into the lower time frame. Once you go into the lower time frame, you're going to be looking for trade inside this area. So you go into the H4. Let's pay attention. Now on the H4, what do we have? Please just look at this. It's a very simple approach, right? We have this area we want to refine an entry QM. First, QM is fresh. Pay attention. When QM is fresh, you don't want to use this. This is something I've consistently reminded you guys of. QM is fresh to this. We come back into the H1. Once the H1 is fresh, it's call forward for execution. So on the H1, we use this area. Okay, on the H1, we're going to use this area. So you can come as low as the 30 minutes time frame, depending on the type of brain you have, right? Then you can decide to use it 30 minutes, this one. Now, a lot of you guys want to talk about this mitigation over here. I'll talk about this when you come for Dr. System Talab. When we come for next year's mentorship, talk about this type of mitigation for whatsoever this area is very, very high probability, right? Then what? Now, if you take a look at it based on structure, what do you see? Super liquidity, break of structure, and what's a structural liquidity, right? Then you execute from here, which is a KLR, high probability, and then look at the way the market rally all the way to the upside, right? This is how KLR works. Very simple, right? So when you understand KLR, 4-hour time frame continuation is going to be one of the easiest thing. And that's the reason for today's class. My reason for today's class is, right, how you take 4-hour continuations, how you need to be picky of key levels and not all key levels. It's not like, okay, doctor said if you're in a bullish storyline, all bullish key levels must hold. No. Or it's only for H4 key level that is going to hold. No. No. But in a scenario, right, you need to understand that once the markets like start moving to a direction, right, once the markets start moving to a direction like this, we're bullish. So we expect this H4 key levels to be used for buys until the market change storyline, meaning until the market give us this type 2 breakouts. So we are not going to be buying anymore. But all these are just opportunities to buy. Now, it doesn't mean that this key level and all this key level must be used for buys. No. But it also doesn't mean that the closest key level must be the one the market is going to use. No. The market can decide to drop as low as this, use this, as far as there's no breakout, and then ignore all these ones. Depending on the one that is giving you the best structure, and also depending on what has happened. One, especially in the presence of fair value gaps. Two, especially in the presence of a candle have closed on the higher time frame. Market want to seek the next key level of the higher time frame. Understand? Now, what do I mean? Now, let's take this bearish bias, for example. All of you guys have already been with me for some time, so you already see this breakout here, so we are bearish. Now, after this breakout here, we are bearish. Market used this key level. Market came back, used this key level. So now, a bearish storyline has already started because market has already started using bearish key levels. Now, my model 4 says is about 2 candle closing, market pulling back to the nearest OCL, which is this area inside here, and then you're using this for a buy. Now, my own focus for today is, okay, scenarios that the market ignores this and market goes for either this or some key levels above. Now, for the market to do that particular thing, like I said, it's either there's an imbalance above or a candle on the higher time frame, higher than the 4-hour time frame, have closed. Then the market wants to seek for a key level around that area. So you need to be very careful. Is there any key level that have not been seeked? I'm sorry. Is there any imbalance above here? No. So market is not seeking for that imbalance. So that's why the market used this. Secondly, a daily candle have not closed. So that's why the market is using this particular area. So what do I see based on my model 4? If you have an area like this for the market to seek it, you need to make sure on the 15 minutes time frame you have a structure type 1, type 2, or type 3 inside this area. So that's why I use 4-hour, 15 minutes. And then recently I want to start teaching you guys something new. What is that? You can also use 1 hour, 5 minutes. Very dangerous, but very reliable. Okay, so this should be the area for the buy. Now, all the criteria have been fulfilled based on this trade value. Now, this high is protected, right? Protected, create a new area for us to use, then we use this. Okay, this one mitigated the protected high, created a new high, and we use this for ourselves. Now, what are the rules? Sweep of liquidity, break of structure, and what? Structural liquidity. Doctor, that's my own logic behind the structure. Everybody in this world use the same structure. Most of us that trade use the same structure, even unconsciously. But I will say this and I will say this again. The logic behind structure differs. My own logic behind structure is what brought about the doctor system. I use the own different thing, right? And that's how I take my own personal trade. Now, based on this, it's like a KLR. A model 4 is just a 4-hour KLR, but you need to be using your brain, right? I've already explained the scenarios that the market ignores some H4 key levels and go for some other ones. You need to be very good at structure for you to understand that particular thing, right? Then the market decided to use this one and drop. Now let's go into the H1 time frame. Now let me talk a little about what I just explained on the H1 time frame now. So now let's take a look at this. I said the way you do KLR the way you do a model 4 on the 4-hour time frame, you can do the same thing on the 1-hour time frame. Now let's look at the 1-hour time frame. Now, market started dropping down, okay? And then some of you will pay attention to this. Thank God I have this. Some of you pay attention to this. The market went all the way up, disrespected this, and the market decided to use this. Doctor, why? Now, the reason market disrespected this often is because of the presence of this imbalance. So once you have an imbalance like this, your refinement can come from this key level, the imbalance itself, or the key level above the imbalance. So these are the 3 points you can have the best structure from. So, but when you switch to the 5 minutes or 15 minutes, you're going to, once you understand structure very well, Oh God, I don't know how far it is. Okay. Once you understand structure very well, it's not going to be difficult for you to pick it, right? Now, this is where the market used. You have this. Once you come into the 5 minutes like this, where are you supposed to use? For me personally, if it's on the 5 minutes, you can see that the way the structure is not organized. It is not organized. That is why I always advise using the higher time frame. I would have been picking area like this for me. I'll pick this area. Why? Because this is where we have the soup of liquidity, the breakout structure, and we have the structural liquidity very close, which the market is supposed to seek and sell. But you can also use the 15 minutes time frame maybe for someone that wants to see things clear. I'm introducing the 1 hour time frame for you guys. The reason is because there's something I do that you guys feel like I'm not sharing with you guys. So I'm introducing the 1 hour. I use the 1 hour sometimes. I know how to use the 1 hour very well, right? So that's why I decided to share it for you guys. Unnecessary losses, try to avoid it. When you have a breakout structure like this, a very deep pullback like this, in short, stop using the 1 hour. Let me not stress you. Use the 4 hour time frame for better moves, right? It's going to give you what you're looking for, because lower time frames are very confusing. You don't know when reversals are going to set in. You don't know when this is going to happen or when that is going to happen. Okay. But finally, let me end the class with going to my pen, which is good. So once it is good, there is nothing too stressful. I will talk about 1 or 2 things, and God is going to give us what you're looking for, right? Okay. Okay. Tap, tap, tap. This was the trade I missed overnight. That's model 5, very annoying. And I saw a little bit of retracement yesterday. I was supposed to take, a continuation here based on this model 5. Market did not tag me in. Can you see this? But then market gave a retracement with the model 5 here too. I just love this model. Very consistent and very nice. I love it. So anyway, that is, I think we can end the class here today. Or KLR is just something that I can talk about it for 3 classes and I'll be talking about new things, right? Please, you should minimize using the 1 hour time frame. In short, you shouldn't have to use the 1 hour time frame. It's very, very, it's going to stress you a lot. You're going to take so much losses. But when you're using the 4 hour time frame, the daily time frames, higher time frames like that, it's going to make a lot of sense for you, right? Well, I think I've shown you guys some trades I use 1 hour time frame. There are trades I use 1 hour time frame, just like you have this, drop down, you have this. So, but if you have area like this, don't forget when there's an imbalance above, market can decide to seek into the imbalance too. So refinement can come from as high as that particular imbalance. Remember, this is something I've preached and preached. For example, again, some people will want to use this for a sell, but there's an imbalance above. Market can decide to take out the high, seek into the imbalance. So make sure that your PY can come from here above, even inside the imbalance. Sometimes market do not seek the imbalance. So you need to be very good at refining. See this one too. Right? You can see the sniper cell. I think I took this cell. Yeah. I took this cell. Did I? I don't remember. No, I did not. It was a similar cell that looked like that. Let's look at the 5-minute time frame. No, I did not. It's not this. It was a similar cell last week, not this week, that I took around there. So this one too, I placed this limit order, if you guys remember, which I should have been. I missed this one here, which is a model 3. Can you see that? So basically, that's what I'm here to talk about KLR. So there is nothing. If you go through my 2025 course, especially, I think I emphasized on it a lot, so you can easily get what we're talking about. So if there's any question, you can talk about your question. I think we should have another session on KLR probably tomorrow morning. Tomorrow by 2. So our class is going to be tomorrow by 2 because of people going to church, including me. So yeah, tomorrow by 2 maybe we continue a session on KLR because there's a lot I need to talk about. I just recall, right? So if you have any question, you can forward your question. We have 1 minute left. They go church, they go church now. They play. All of now, like all my students where I teach how to trade, maybe say they don't start 1 minute trade. I know they understand. I know they understand when again. It's okay to seek for more knowledge from somewhere. Yes, it's very okay. It's okay to say, you did not understand my concept and it's not the concept that made you profitable. It's okay. But all these people